Last month, the non-farm payrolls nearly doubled the market forecast, but even that wasn't enough to break the Fed's deadlock. Inflation is still too hot for a rate cut, while the labor market is too fragile for a hike. The Fed stays frozen for now, and that's why the NFP this month is crucial for its next move. The report will be released on the 5th of June at 3:30 p.m. Stay with me as I break down what the data could mean for markets and how to trade around it. Before I break down the upcoming jobs report, make sure you subscribe to our channel and turn on notifications so you don't miss out on any market updates and insights. The April NFP report shocked the market with 115,000 new jobs added, almost doubling the forecast. However, the reading was still notably lower than 185,000 in March, signaling a gradual cooling in hiring momentum. On the other hand, the unemployment rate remains unchanged at 4.3%, while the wage growth fell short of expectations, with average hourly earnings rising by 0.2% month over month and 3.6% year over year. So how did markets respond? The stronger than expected jobs report did little to lift the dollar, with the dollar index remaining under pressure after the release. Gold was weighed down by the solid jobs print and edged lower toward $4,700. On the other hand, all three major US stock indexes edged higher on the back of the NFP report. Oil, however, was merely influenced by the jobs report. Driven by the US-Iran agreement to gradually reopen the Strait of Hormuz, the oil prices edged down. To trade around the NFP release, you've got to watch the forecast numbers. Comparing these forecasts to the actual data gives you a clear picture of where Forex, commodities, and stocks could move. The upcoming May NFP is expected to edge lower to 90,000 in job growth. On the other hand, the unemployment rate is projected to again remain unchanged at 4.3%. The wage growth is expected to weaken, with the average hourly earnings increasing by 0.3% month on month and 3.4% year on year. So how could the market react to the NFP report? And what should traders watch out for as volatility kicks in? In a moment, I'll break down three key assets: the dollar index, gold, and S&P 500. So stick around for the full technical analysis. Let's start with the US dollar index. If May NFP meets the forecasts, US yields could drift lower and offer modest dollar support. An upside surprise could lift the odds of earlier Fed tightening, pushing DXY toward resistance at 100.20 and 100.65. A miss, however, could raise the easing expectations and weighs on the dollar, with support levels at 97.99 and 97.64 in focus. Now let's look at gold. Gold has been eyeing a potential rally amid policy uncertainty and softening real yields. A weaker print could be the catalyst driving gold prices toward $4,890 and $4,773. If the job growth beat expectations, expect a pullback with downside targets at $4,285 and $4,190. And now, the S&P 500 index. A softer NFP gives equities room to move higher to the potential upside targets at $7,795 and 7,714. A stronger reading, however, could pressure the index toward support at 7,528 and 7,446. That's the full breakdown. Remember, this is just my perspective on the market and not financial advice. If you find this useful, let me know in the comments. Hit the like button, share it with someone who needs to see it. And don't forget to subscribe with notifications on so you don't miss the next market updates.